Namaste. Welcome to our 149th episode of AAA Weekly Webinar Series. The little bit of delay because of the technical reasons, because the last time we couldn't do the recording, so therefore we actually were trying our proper recording of this webinar, which is 149th episode. Very soon we will be completing 150 episodes without any gap, without any week. So we are feeling pride in doing this, although it takes a lot of time of my team as well as myself, but still we are enjoying. In the last episode, which is 148th episode, we have discussed various regulations which were notified by IBBI on 29th of January 2025 and also on 3rd of February 25. Today, we are discussing the discussion paper, which is actually very important discussion paper and a very, very important amendment which is proposed this time in the discussion paper is complete abolishing of the process which is called sale of the corporate debtor during liquidation process or sale of the business of the corporate debtor during liquidation process. That is proposed to be abolished completely. According to me, this is the most important change which is proposed in the discussion paper. The discussion paper also puts a lot of responsibilities, additional responsibilities on the resolution professionals, insolvency professionals, liquidators. Also, the circular which is issued by IBBI also proposes another additional responsibility. Information utilities, the technical standards have also been modified because of the practical difficulties, the feedback that they have received regarding the authenticity of data. So we will be discussing all this today in this 149th episode of AAA Weekly Webinar Series. So I would be sharing my screen. So I would say that, yes, I have already said that the discussion paper released by IBBI dated 4th of February 25, discussion on the circulars released by IBBI on 11th of February 2025 and the amendment in technical standards of information utility which was notified by IBBI on 29th of January 2025. This is what is our subject today. First of all, we will be discussing the discussion paper introduced on 4th of February. In discussion paper, there are many things which the IBBI proposes to change, like the key areas. One is the review of expenditure on goods and services availed during CIRP, including the leases, all active leases where the corporate debtor is spending some money on rents or other expenditure. All expenditures incurred by the CIRP for operations, maybe for continuation of the operations or maybe even for maintenance and upkeep of the assets. All those are called operational expenditures, and the additional responsibilities have been given to the RPs for this. In case of interconnected entities, since the group insolvency has not been notified, there is no law which is presently proposed to be made for group insolvency. So this is a kind of interim arrangement for group insolvency in India. That is the coordinated resolution for interconnected entities. Coordinated resolution for interconnected entities is just like group insolvency. You can say that the group insolvency in an interim manner would be activated once these proposed regulations are notified. All the resolutions plans will be presented by the RP. This is just a clarification. Also, one statement of affairs will have to be submitted by the corporate debtor before adjudicating authority in any application which is filed under Section 7 by any financial institution. Then treatment of avoidance transactions. This is also more of a clarificatory nature. Then the the part-wise resolution, may it be real estate industry, may it be any other industry, part-wise resolution, that is also something which is uh, a kind of some modification is proposed in this. COC is being empowered for expediting the resolution plans. They can always say that there are a lot of litigation which is pending regarding distribution, regarding claims, that can be kept pending, and the resolution plan may be immediately approved so that all other disputes can be kept pending. Non-receipt of resolution repayment plan in the personal insolvency, and also some one little change in the liquidation process. That's what is the objective today. The first is the review of expenditure of goods and services availed during CIRP. Because see the section 14, which is the moratorium section. In that section, it is also being misused at times. Some of the companies and RPs are also taking some advantage of section 14, which says that the essential services will continue. This clarification. What is the feedback to the IBBI? The feedback to the IBBI is that unreasonable accumulation of cost, CIRP cost seems to be very high, and when it goes to the adjudicating authority and everyone in the COC says that the RP should have saved it, RP should have contained it, RP should have tried to diminish or reduce the CIRP cost. So therefore, whatever the expenditures which are important, which are reasonable, that only should continue. All other expenditures should be stopped. As I said, the misuse of moratorium should also be should also not be allowed. And also, what I'm saying is there is no structured mechanism for evaluating the necessity and cost effectiveness of any kind of expenditure during CIRP. So now there is a process which is defined, and in this process, the RP and the COC would approve some of the expenses. Now, what is proposed in this discussion paper? One, that the regular review of the significant operational expenses are proposed. Specifically, the rent that is being paid on any leased property during CIRP. So there is a regular review which is proposed. So that's a very kind of streamlining the process where the CIRP cost is contained. Then the RP is now required to submit a comprehensive assessment report of substantial operational expenditures. So this is an additional responsibility on the RP to submit a comprehensive assessment report. And that is also specifically on the leases of the properties, various properties which are available on the company on lease. So that properties, either those properties should be retained, and then the COC must pay the rent. In case those properties are not required, then the COC must release those properties, surrender the leases, and that has to be done within 30 days of the COC formation by the interim resolution professional or resolution professional. Then the COC also has a responsibility to review that comprehensive assessment report and give the opinion and also pass resolutions whether the leases will continue and what kind of expenditures will continue. That actually, or what kind of leases would be surrendered. Where the COC determines the leases that are not essential, then the RP may surrender such properties to optimize CIRP cost. So now the IBBI is proposing that a regulation 32 capital A would be inserted. In that regulation, which is titled as Management of Operational Expenditures including Leased Properties. So in this case, so there are responsibilities. One, within 30 days of constitution of COC, this particular report, which is comprehensive assessment report, that has to be prepared by IRP or the RP, and all the substantial operational expenditure, including but not limited to leased properties, that has to be submitted in this comprehensive assessment report, and there is a very detailed requirement regarding for lease properties. There is a requirement that that the RP or the IRP would give the tenure of the lease, the payment schedule, and what are the outstanding obligations, and why this occupancy of that particular premises is important. Can we release that property? Can we save the cost? All this has to be given by the IRP in a comprehensive assessment report, and also what is the criticality of those premises for keeping the company as a going concern or for maximizing the value. So this is what is the financial impact analysis. All this will have to be given by the IRP-RP to the committee of creditors, and the committee of creditors is also having another responsibility, that the committee of creditor shall review the report, comprehensive assessment report, which will be submitted by the IRP or RP, that will have to be reviewed by the committee of creditors within 15 days. And within 15 days, the committee will decide to take appropriate decisions regarding continuation or discontinuation of specific operational expenditure. And in case of leasehold properties, whether to continue or surrender the term or terminate the leasing arrangement. That is what is required by this committee of creditors. And then for operational expenditure. Now, whatever has been done by submitting comprehensive assessment report and the COC reviewing it, and whatever decisions has been taken, after this, every quarter, the same thing will be reviewed again. Every quarter, all the expenditures will be reviewed, all the lease arrangements which are continuing will be reviewed, all the lease arrangements which are supposed to be surrendered or terminated, that has to be reviewed. So this is where the review has to be done. The review every quarter. So this is an additional responsibility on the RP, IRP. So let us try to understand with this simple amendment, what additional work is required to be done by the IRP, RP. One, comprehensive assessment report. First of all, what is important for comprehensive assessment report is whether the information is available with the IRP, RP or not, whether the promoters are cooperating or not, whether the lease agreements are available or not, whether the all the expenditures are available or not, whether the workmen or any other detail is available or not, what is lying in those premises, that also has to be seen. So understanding all this within the first 1 month, that is what required from the IRP, RP. So this is something which is important, but this is something which is adding a lot of responsibilities. While there is no assurance that the promoters will cooperate, there is no assurance that the key managerial personnel will cooperate, there is no assurance that they will share the data, there is no assurance that they will give the access. And in case 19.2 application is filed, that 19.2 application is also not bringing quick results. So what will happen within the first 30 days of after the constitution of committee report, that probably the quarterly review in fact will become monthly review, because the information will keep coming in, and the decisions of the committee of creditors will be a kind of continued decision during the continuation of CIRP. In every COC meeting, there will be something like review of operational expenditure, review of expenditure on leases. Based on this regulation, this will be completely a continued process during the entire CIRP. So presently, the operational expenditures are incurred on a regular basis, and a monthly report is required to be submitted, like this is the total cash flow, and this is the total profit or loss in the company, and that is kind of MIS that is submitted, and this is what is actually happening presently. But now this is an additional responsibility. Objective of this proposed amendment: one, that the strengthening the COC decision-making process regarding significant operational expenses, ensuring systematic oversight and transparency in major operational costs. particularly in leased properties. Empower the COC to make informed decisions on whether to continue or surrender leases properties based on the necessity and value of the resolution process. Prevent unnecessary cost accumulation by allowing RP to surrender non-essential leased properties. This actually will decrease litigation, because see, in various of cases, in our cases, where there are about 30, 40 landlords, so everyone is going to court. They want the lease to be surrendered or the rent to be paid. Since the COC is not approving the rent or there is no money to pay the rent, therefore, the RP is not able to take a decision whether to surrender or to maintain that leases. So therefore, this is based on a feedback that the lease, actually, the litigation from the landlords will be reduced. And also, in case the COC has approved the cost, then COC would also like to contribute, or COC would like to allow raising interim finance. That is also another objective of such kind of amendment. Now, coming to the another part, which is a review of expenditure of goods and services availed during CIRP. And essential services is a very in major part of the expenditure. And in most of the time, the section 14 regarding essential services or continuation of essential services is misused. It is misused by just saying that these are essential services and the RP is not required to pay. And however, the operational creditor, the service provider, does not have any right to discontinue the services. So that is what is the present difficulty. That is the feedback to the IBBI. So based on that feedback, now the IBBI proposes that to avoid such kind of misrepresentation, to avoid any negative impact on the service providers or the operational creditors, the utility providers, mostly they are forced to continue the supplies and they are also not getting payment. This is an unfair advantage to corporate debtor at times, and this is a contradiction, and therefore they need a clarity in the law. So what happens? What happens when we actually say all this is misrepresenting and all what one we are saying? So then coming to the other part, which is the what is the proposal now? Now the proposal is that as far as the essential services are concerned, they are actually trying to amend Regulation 32, seeks to refine the distinction between the essential and critical services during CIRP by updating the existing illustration. So the present illustration, which is given in section 14, in the part of essential services, is something which is not giving the proper perspective of this particular section. So the revised example clarifies, instead of water, it is clarifying the electricity. It says that any electricity which is basically being used for the survival of the humans, survival of the data, so that is what is required for lighting, computers, and of course, air conditioners also, because in case the humans are working there, so they would like to work. So that is the essential services. However, if there are manufacturing services or there are services being provided where a lot of electricity is being consumed, so all that which is a high voltage electricity connection, that of course which is required for manufacturing operations or in some cases even for services, some kind of services. So that is a critical service and requiring the payment for the current dues, then only those will continue, because that is actually giving some undue advantage to companies that the huge power bills are not being paid. Maybe the power supply companies have also represented, but now the proposal is that in case it is a high voltage, it is something which is being used for manufacturing, it is something which is being used for providing services, then the current dues has to be paid, and only then the essential services will continue. So therefore, in the proposed amendment, the illustration which was given, that has been changed. The earlier illustration, which was regarding water supplied to a corporate debtor, will be essential supply for drinking and sanitation purposes and not for generation of hydroelectricity. That was not giving the clear perspective. Now, the illustration is being changed, and by adding an illustration which is regarding the use of electricity. Now, what the illustration is: electricity supplied to a corporate debtor for maintaining basic facility upkeep, such as lighting and powering computers, would constitute essential services. However, if the corporate debtor operates a manufacturing facility, the high voltage electricity supply required to run the machinery may be considered as critical services by the insolvency professional, as it is being used as a direct input for production, and current dues for such services must be paid during CIRP to prevent any service discontinuation. So that is this illustration which is being used. This is again based on various judicial pronouncements. So one basic objective of IBBI, whenever there is a regulation which is being inserted, that basically the most of the regulations are being made to reduce litigation. So this is also a major part of the litigations, that this essential services are continued or should not continue, whether the disconnection is legitimate or illegitimate, whether the current dues should be paid or not, whether the landlord should come to NCLT for getting the vacation of their properties or not. All these are huge litigation reasons. So therefore, IBBI is trying to reduce litigation by clarifying and also by giving clear perspective to court that this is what is the regulation. Anything beyond regulation should be rejected. So that's what is the present scenario. Then, now coming to the much important part of this discussion paper, that is a kind of interim arrangement regarding group insolvency. The IBBI says that we have seen different and complex corporate structures. In those corporate structures, at times, it is very difficult to understand the ownership, control, dependence, interdependence of businesses, interdependence on securities interest, intermingling of the creditors. All this is a complex creditor structure. In case we don't do this kind of interim group insolvency, then it will be, so far, it is only a siloed approach that one entity is separate and cannot have anything which is with the other associate entity, where the similar business, similar management, similar key managerial personnel are in fact operating, but that is also which is not permitted. Even there is no coordination between the resolution professionals. Even there is no coordination between the timings. Therefore, this kind of interim arrangement is the most welcome part. Then is the opportunities are also missed. We also have seen that there are cases, in case the resolution plan is collective, or the resolution professional is only one for all the entities, it is better for resolving that company. In case the creditors are common, and also, although it is not proposed, also there is a possibility that the COC also can have joint meetings. That also is possible. So therefore, the uncertainty for the stakeholders, and therefore there is a need for the regulation. Therefore, there is a need for the regulation. Now, let us understand what is the proposal which is given by IBBI in this discussion paper. It is proposed to amend CIRP regulations to introduce a mechanism for coordination of CIRP of interconnected entities. Now, this may include provision for joint hearing. The adjudicating authority can stipulate that all these cases will be heard together. And this is happening in cases. We have applied for a same bench and like kind of coordinated hearing, and it has been agreed by adjudicating authority. Appointment of a common resolution professional. There are applications, and the courts have taken a decision that yes, the resolution professional can be appointed as a common resolution professional. Also sharing information protocols, that is also something which is possible. In fact, we are also doing coordinating with the other RPs and also the coordinating the timelines. So what happens is the one company is 3 months or 6 months ahead of the other company. So therefore, the coordinated Form G is not possible. Coordinated RFRP is not possible. and therefore receiving coordinated resolution plans are also not possible. In case the COC can consider, there can be separate 3 or 4 insolvency processes where if the timings are coordinated, if there is a possibility of common COC, then there is a possibility that one resolution applicant can take all the entities together. So therefore, this amendment will increase efficiency, this will reduce cost, and this will improve the outcome in cases where interconnected entities are involved and all the entities are undergoing the CIRP. So now in this case, what is proposed? Regulation 40 capital E is now being introduced, and in this particular regulation, what it says? Therefore, first of all, there should be 2 or more corporate entities, and all corporate entities must be undergoing corporate insolvency resolution process. It doesn't say that all the application, at the application stage, it can be done. It says that all the corporate entities must be under CIRP, and they are all interconnected. And there can be interconnection based on the existing control and significant ownership. Therefore, in case all these 3 conditions are fulfilled, 1, the 2 or more corporate entities, 2, interconnected by way of an existence of control and ownership, and also we can add that the similar assets, interdependent assets, and then what the adjudicating authority can do. Adjudicating authority for coordinated conduct of process subject to obtaining the approval of each committee of creditors. First of all, the committee of creditors of all the entities which are under CIRP must agree to this. That is also with 60% voting share. And in that 60% voting share, and then the regulation, so that that is not important. In case the COC is agreeable, then only such kind of application can be made to adjudicating authority, and such kind of orders can be also given by the adjudicating authority. And adjudicating authority, if satisfied that coordination would be the best interest of the corporate debtor and their stakeholders, pass appropriate. The adjudicating authority can pass appropriate orders by 1, they can order for joint hearings. They can appoint common RP. They can also direct the resolution professionals to share information. They can also coordinate the timelines and any other measure that they can think about. They can also other measures means they can also order for common COC meetings. Common COC, they can also do that. And they can also order that this is such a case where is only one resolution applicant will give the maximum value. That also is possible. So this is somehow interim group insolvency, which is now being proposed in this amendment. Coming to the next, so I can say that yes, this is more or less a clarificatory. Presently, there are regulations. One is the section 25, subsection 2, clause I, which says it mandates that the resolution professional shall present all resolution plans at meetings of committee of creditor. So, as an RP, we have to present all the resolution plans before the COC meeting. Then section 30, subsection 3 says that the resolution professional shall present to the committee of creditors for its approval such resolution plans which confirms the conditions referred to in subsection 2. So all those conditions, like the mandatory conditions of the resolution plan, should be there. The resolution professional shall present all those resolution plans which are compliant to section 30, subsection 2. Then regulation 39, sub-regulation 2 says that the resolution professional shall submit to the committee of creditors all resolution plans which comply with the requirement of the code and regulations thereon. So then, like section, there is some kind of ambiguity is there in all these 3 provisions, and there are basically 2 obligations that are actually casted on the resolution professionals. One, that there is a general duty to present all resolution plans which received to COC, and also there is a specific duty to present only compliant resolution plans for the COC approval. However, the proposal is that there have been instances where some plans have not been they have been proposal. There are some plans have not been even presented to COC because the insolvency professional has actually considered those resolution plans as non-compliant. So therefore, to avoid this kind of lack of transparency, now it is what is the proposed? What the proposal is, it is mandatory to present all the resolution plans before the committee of creditors. Second, the RP is under obligation to provide a detailed compliance report of Section 30, subsection 2, and also RFRP compliant. That means the mandatory contents of the resolution plan and also the RFRP. Now, the justification of non-compliance, when the RP says that this resolution plan is not compliant, the RP must give reasons that why this resolution plan is non-compliant. And those reasons have to be given to committee of creditors. So therefore, the committee of creditors must take informed decisions whether this particular resolution plan has to be rejected or not. And in this manner, there is a potential for value addition. Because in case all the resolution plans are before committee of creditors, all the resolution applicants can be presented before the committee of creditors, and the COC can, in fact, negotiate with all of them. This will also reduce litigation, and this is also increases some efficiency in the resolution processes. Therefore, the Regulation 39 2A is inserted. Now, in that regulation, what it is says, the resolution professional shall also submit to the committee the resolution plans received which are not compliant with the provisions of the code, and these regulations, and specify in detail what aspects of non-compliances that has to be presented. So these are compliant reports, these are non-compliant reports. These are compliant reports with a detailed due diligence. These are non-compliant reports with a detailed due diligence, and also the justification why these are non-compliant. This is also for the sake of transparency, this is important. So these are, so now moving on to the next amendment, because I would like to cover the entire discussion paper today. So I'm not opening the questions as of now, because see, whatever we are discussing, in case any of our listener is understanding that there is some gap in the proposal, so they all are supposed to give the feedback to IBBI before the regulations are notified. So what I am trying to say, this is okay, the resolution plans, everything is okay, but the when this interim group insolvency is also being modified, I think there should be also one option given to the adjudicating authority, that the adjudicating authority can also direct to have common COC meetings and also common voting for the entire debt in case there are common creditors. So the common creditors, the common claimants have not been covered in this interim group insolvency. That can also be covered. So all our listeners and viewers can give this mandate, give this feedback to the IBBI. Moving forward to another amendment, which is also significant amendment, and that actually presently it is applicable only on Section 7 applications, and that too submitted by financial institutions. I will come to the definition and why. What is the feedback based on which this kind of amendment is proposed? One, that when there is a lack of information before the adjudicating authority about the affairs of the company. Adjudicating authority at times spends time on those companies where there is no asset, where there is no liability, and then the adjudicating authority is understanding the litigation continues for years, and then the adjudicating authority must understand the importance and the operations of the company. So therefore, this amendment is very important for adjudicating authority and also for the resolution professionals, because at times resolution professionals are appointed by NCLT, whereas no information is available with the adjudicating authority about the assets and liabilities of the corporate debtor. So therefore, this proposal is that the CIP regulations would be amended to mandate the submission of a statement of affairs by the corporate debtor. So this statement of affair has to be given by the corporate debtor, and it has to be submitted to adjudicating authority in their reply. And then the proposal says that the statement of affairs would be submitted by the corporate debtor in their reply before adjudicating authority. And then the essential information would be part of the statement of affair. What is the part of the affair? That would be the one is the details of assets and liabilities of the corporate debtor. 2 copies of the financial statements for the last 3 years, and also a brief overview of the workmen and employees and what kind of amount is due to them, and information about the books of accounts and records, at what place books of accounts are lying, at what place records are lying. That has to be given by the corporate debtor in their reply. So that is very important, so that whatever this particular submission, so then in that case, this reply should have the RP should have the access to this reply. Whenever the IRP is appointed, the IRP must have the access to this reply. Because presently there is no mechanism where the IRP can have the access to all the replies filed during Section 7 proceedings. So therefore, the amendment can also cover that once the CIRP is initiated, the IRP will have the access to this reply to understand the status of workmen and employees, status of assets and liabilities as declared by the corporate debtor, and also the location where all the records and books of accounts are maintained, so that the control and custody is taken quickly. So this also needs, in case the corporate debtor does not submit, in case the corporate debtor does not submit the statement of affair, or does not submit the financial statements, or does not submit any other information, then what are the consequences? Can there be consequences? Can we somehow say that in case all these things are not submitted by the corporate debtor, there's something bad, something adverse will happen to corporate debtor? But that is not there. By providing one regulation, I don't think the corporate debtors will comply with this. I'm sure they actually would not submit this reply. And there has to be some kind of fear in the minds of the corporate debtor or the promoters or their directors, that in case they will not provide this, there will be something which will be bad for them. But presently in the law, there is nothing provided that there will be something bad to them in case they don't provide information. So the only thing is the Section 68 and Section 70, that actually is taking a lot of time, because even NCLT is taking time, and then thereafter IBBI is taking time for prosecuting the promoter. So that actually is not happening. So therefore, this amendment, it says that the statement of affair will be submitted, employee details will be submitted, and 3 years financial statement will be submitted. Now, it is only and only applicable to Section 7 application. And that too, in case that Section 7 application is filed by a financial institution. When we see the why it is only restricted to financial institutions, we couldn't understand anything why it is restricted to financial institutions. Why it is not possible in Section 9 application. The corporate debtor should provide the details of assets and liability to the adjudicating authority. If someone comes and says that the company is not solvent, otherwise the company would have paid the dues. Now, what is the definition of financial institution as per Section 45I of the Reserve Bank of India? This particular Section 45I says that even NBFCs are also included in this. Even the company engaged in shares and securities, like they also are called financial institutions. Hire purchase companies are also included in the financial institutions. Insurance companies are also considered as financial institutions. Chit fund companies are also considered as financial institutions. Leasing companies. So any application filed by the financial institutions, that actually will have this requirement and not others. not others. Now, the next amendment which is proposed is the reliefs and concessions subsequent to approval of resolution plan. There are incidences that while the resolution plan is being approved, the resolution applicant somehow, or even after the order is received, somehow he gets a kind of indication that some of the reliefs have not been sought and some of the reliefs have not been allowed by the adjudicating authority. So therefore, he submits a revised application for granting certain reliefs. That is also adding to a delayed litigation and delayed approval of resolution plans. However, the IBBI has got the feedback, and the objective of this is also to reduce the litigation. In this proposal, it says that the post-approval modification in the resolution plan or modifications in the ask for reliefs and concessions that cannot be changed. This also assures that there will not be any uncertainty on the timelines, because resolution plan, once approved, that should be final and that should be ready for the implementation. That is what is the finality that everyone would like to assure. And then there should be explicit prohibition on filing any additional application seeking additional concessions or additional reliefs. That is what is the objective of this regulation. Defeat purpose. This actually defeats the purpose that if everything has been done, the process has been completed, then why additional applications, why additional reliefs, why additional concessions? That also means that preparation of a resolution plan is a very, very professional and a specialized job. Not that everyone can prepare a resolution plan. There has to be a complete understanding of the company for asking relevant reliefs and relevant concessions. Now, what is the present status? The resolution plans are prepared by some professionals who have not got the access to the entire information about the company. They should actually have the entire information, or in some cases, maybe some litigation is not disclosed, or it was not in the knowledge of the insolvency professionals. So therefore, the reliefs are not asked, appropriate concessions are not asked. So therefore, the preparation of a resolution plan is now considered to be a very, very specialized job. Any concession missed out, any relief missed out, there will not be any other option. There will not be any other remedy. The resolution applicant will have to live with it. So therefore, the proposal says that the explicitly state that no modifications can be sought once a resolution plan is approved under Section 31. All conditions must be built into the resolution plan before approval. So therefore, the professionals who have complete understanding of the resolution plans, complete understanding of the corporate debtor for which the resolution plan is being made, they are definitely would have more demand in the market, because there will not be any option of missing now. If you miss, then you finally miss and you'll have to live by it. So this is also an important amendment. The regulation 39(4)(a) is being inserted to say, upon approval of the resolution plan by the adjudicating authority under Section 31, no modification shall be sought by the resolution applicant in the resolution plan approved by the adjudicating authority. That is what is the proposal. Moving on to the next amendment, which is incentivizing the interim finance providers. Although something is being done, but the main difficulty in raising interim finance, that in case the company goes into liquidation, then the interest only would be provided for 1 year and not beyond that. So therefore, the interim finance providers are not comfortable, because they can apprehend that in case the company goes into liquidation and there is no realization on assets for some period, then their return on investment will be much declined. Therefore, there is a reluctance in providing the interim finance. IBBI has in fact considered that interim finance is very, very important for a efficient resolution process. There is a reluctance in the market for a couple of things. One, that they don't have any information about the company or in the process. And they also feel that the liquidation may take longer period in realizing some of the assets. And also they are actually, it is impacting on their risk. So they don't have much of risk assessment ways. So therefore, how to increase the availability of interim finance, the proposal is the committee of creditors will be empowered to decide on inviting the interim finance providers to attend COC meetings as observers with no voting right. If a person has provided interim finance, that person will be invited for the COC meetings as an observer, but without any voting rights. So it is basically say that the COC will have the autonomy in decision making while creating a mechanism for enhanced engagement for the interim finance providers where the deemed beneficial. Now, the regulation says slightly differently. The regulation which is proposed, it is proposed in 18 sub-regulation 5. The committee may direct the RP to invite the providers of interim finance. It is not clear whether they can be invited before the interim finance is provided or even after that or only after that. This needs a clarification. Although the word is written in providers seems like that who has already provided interim finance to attend such meetings of the committee, not all, as the committee may decide without voting rights. So one, that the permission has been given to invite interim finance provider for how many meetings and in what all meetings, that will be decided by the committee of creditors, and it is not something that is RP can invite an interim finance prospective interim finance provider to the meeting. It is also not very clear whether the RP can share information memorandum with the proposed interim funder. That is also needs clarification, because see, the interim financer would definitely see the conditions of assets and liabilities of the company. That is something which is available in information memorandum. In case information memorandum is not given, and can it be given or not, that also has to be seen, because see, that part is quite confidential. Another amendment is regarding the disclosure of treatment of avoidance transaction. Disclosure and treatment of avoidance transaction. See, the COC presently, let us understand what is the feedback to IBBI and what are the challenges. COC is empowered to decide presently, the COC is empowered to decide the treatment of avoidance transactions under the resolution plans. RP is required to forward all the copies of the applications filed under section 43, 45, 49, 50 or 66 to the resolution applicants. However, this actually at times leads to inadequate disclosure, information asymmetry, and also needs a stronger framework and lack of periodic updates. Now, when we all say this, when we see this kind of feedback which is going to IBBI, so IBBI now propose that the disclosure of the transactions application is mandatory in IM. Then IM must be updated regularly whenever there is any additional transaction is found, identified, and reported. Then any new avoidance transaction that must be updated to the committee of creditors. Then it must be disclosed in the IM. And then the treatment of undisclosed transaction. In case any transaction is not disclosed in IM, it will never be considered as part of the resolution plan, because the person who is submitting the resolution plan has submitted the resolution plan based on IM, and he has not factored in whatever he's offering to the committee of to the creditors. He has not factored those transactions. So therefore, any transaction which is not reported in IM that can never be part of the resolution plans. In case a resolution plan is approved and later on some of the transactions are identified after that, or some of the transactions, even if identified before the release of IM, but was not updated and was not informed to PRAs, those transactions can never become part of the resolution plans. That is what is the important. It's basically, again, it has in two-way amendments have been done. One in Regulation 36 HA, which the proposal says that the details of all identified avoidance transactions, if any, fraudulent, wrongful trading, and subsequent filings before adjudicating authority as referred, that has to be shared. That should be shared with the PRAs. Then a resolution plan shall not provide for assignment of any avoidance transactions in case it is not disclosed in the information memorandum, and if it is not intimated to all the prospective resolution applicants under Regulation 35 capital A before the last date of submission of the resolution plans. So this is what, one, it gives you clarity that in case the avoidance transaction is not provided in the IM, it would not be considered as part of the resolution plan. Second, most of the, it is also a direction that the IM must be updated again and again. Now, the next modification is the request for resolution plan, RFRP, for part-wise resolution of the corporate debtor. Presently, we have Regulation 36 capital B, which says that the sequential approach, it says the first of all, the resolution professional will invite for the expression of interest for the entire company as a going concern. In case the no resolution plans are received or no interest is received, then the COC may decide to invite the part resolution plans. And therefore, it is presently taking time because of the sequential approach, that the first this will happen, then this will happen, and then this will happen. Now, what is being proposed by IBBI, that the that even in the first instance, in case the COC is saying, the COC is having a view that the different businesses of this company should be sold to different parties so that we maximize our realization, or different assets, one asset or two assets can be separated from the main resolution plan, and for those assets we can invite separate resolution plans. So that is something that can be done in the very first expression of interest, in the very first Form G, and in the very first RFRP. So therefore, it saves time. It saves time, and it also gives a power to committee of creditors to think in a better manner for maximization of the value of the corporate debtor. Therefore, the Regulation 36B, sub-regulation 1 is amended, and it is saying that the resolution professional may, with the approval of committee, simultaneously invite resolution plans for the corporate debtor as a whole or one or more assets of the corporate debtor. That is something which is already presently Regulation 6A, sub-regulation 6A says that if the resolution professional does not receive a resolution plan in response to the request under this regulation, he may, with the approval of the committee, issue request for resolution plan for sale of one or more assets of the corporate debtor. This is what is now being deleted. So therefore, this is also an important amendment. And now I am coming to a very, very important proposal which has come from the IBBI in the discussion paper, that is empowering the COC for expediting the implementation of resolution plans. So now the resolution plans at times are not approved by the adjudicating authority because, one, there are many litigation because of the claims. There are litigations on distribution of the proceeds of resolution plan. So the claims and other litigations can be kept aside the resolution plan can be approved and can be implemented. Once the resolution plan is implemented, then the adjudicating authority can decide about whether the claims were verified appropriately or not, whether the security interests were verified accordingly or not, whether the distribution is according to law or not. That can be decided separately. So therefore, the delay in approving the resolution plan, that can cause to value erosion, that can cause to deterioration of assets, that can cause to conservative bidding, and that can also suboptimal price discovery. So therefore, in the last Insol conference in 2024, it was kind of a feedback which was given by the resolution applicant that the delay in approval of resolution plans, that is actually the main hindrance why many people are not interested in resolution, but more are interested in liquidation. So based on this feedback, now the IBBI is proposing that there can be two-stage approval of the process. One part is where the financial part, which is a financial bid and the basic implementation framework, that can be implemented, that can be approved. And what can be kept pending is the intercreditor dispute, distribution matters, and other related aspects that can be decided later on, so that the resolution plan can be approved and the resolution plan can be implemented, and all these disputes can actually find their way out later. So therefore, the implementation of the resolution plan can be designed in a phased manner. In a resolution plan, this is very important that in case we really want to implement the project, we can do it. We can do it as per the requirement which is suitable to committee of creditors. So therefore, Regulation 39 AA is now introduced, which is headed as phased approval and of resolution plans. So the resolution plan can be approved in two phases. One is the financial part and the implementation part, and the other is regarding the distribution part and the claims part. So that's what is the proposal in this case. And now some amendment in the personal guarantors insolvency matters also. There is a practical difficulty which is now faced by the adjudicating authority, that in many cases the repayment plan is not submitted by the debtor, and the next process is not provided in the law. So something which is being done based on traditions. So though that is something which is regularized by this proposal in the regulations for personal guarantors insolvency. Now the regulation says that in case the repayment plan is not submitted, the resolution process has to be terminated and bankruptcy application would be filed. Now, the only thing which is now changed is that the regulation 17(b) is introduced, and the first thing that this particular regulation will be invoked, that no repayment plan has been prepared by the debtor. Then the RP will file an application which will be approved by 51% of the creditors who have submitted their claim. So therefore, there has to be a committee of creditors meeting. There has to be an application from the RP after the meeting, and it will be 51% majority would be required. And that application will say to adjudicating authority that there has not been any repayment plan and appropriate direction may be given. So that is what is the one which is important. But then, as I said, the most important is one amendment in the liquidation process regulations, that is the complete abolition of the process of sale of corporate debtor as a going concern during liquidation. Once the company is liquidated, all the assets will be sold in piecemeal or in lump sum. The two clauses are completely deleted. These are proposed to be deleted. Now, what are the feedbacks? What are the feedbacks to the IBBI? One, that there is a conflicting recommendations are coming from various committees. Some committees are saying that the CIRP should be conducted in such a manner that there should not be any other possibility of any other person to take away the company. Two, there are many instances where during CIRP nobody came, but during the company as a going concern, there are many people who came forward because they are feeling more comfort, like within 90 days we will get away everything. Even the value would be also reduced. Liquidation should be a last resort, that is already said. So therefore, more time can be spent in the CIRP period rather than liquidation. There should not be further any time which is given to sale of the corporate debtor as a going concern. IBBI has got the feedback, there are poor outcomes. The realization has been poor in sale of the corporate debtor as a going concern. Therefore, there is no value preservation, because in case the company is spending a lot of money in preserving the value of keeping the company as a going concern, that also adds to liquidation cost. And the legal disputes are also there, because in the liquidation as a going concern sale, whether it is akin to resolution plan or not, whether all the benefits which are applicable to resolution plans can be given to sale of the company as a going concern during liquidation or not, whether 79 relief, section 79 relief of the income tax, whether it is available to companies like this or not, whether section 115 JB relief is available to such companies or not. So there are many difficulties, there are many disputes. So therefore, it is now proposed that the provisions regarding sale of the corporate debtor as a going concern during liquidation to be totally abolished, totally one focus that once the company is liquidated, it will never come back. It will completely be sold as asset-wise. So therefore, the in Regulation 32, Clause E, which is sale of the corporate debtor as a going concern, Clause F, the businesses of the corporate debtor as a going concern are being abolished, and Regulation 32, capital A, which is completely for sale of going concern, that has also been abolished completely. That is what the discussion paper is. So these are the various amendments in the discussion paper. One more circular that I would like to discuss, which was given by the IBBI on 11th of February 2025, and that is regarding that every insolvency professional is supposed to inform the IBBI regarding all the assignments wherever he has been ever appointed as IRP, RP, liquidator, or RP for the personal guarantor cases, or the bankruptcy trustee, or even the administrator in those cases where the financial service providers, where the RBI starts the process. So that is the circular where everyone is supposed to submit this information to IBBI, and even for the running cases, even for the closed cases. So we don't have any time to kind of take the question answer session. However, one thing which is important is that there is an amendment in the technical standards of information utility. And primarily, I have gone through the technical standards. Primarily, the registration process for any person using the IU has been streamlined. Online authentication is also proposed, and the information which is also with that has to be submitted, which is electronically verified. All this has been done. All this has been done in the in this technical standards on information utility. We definitely would like to close the webinar today because we have explained the discussion paper at length, and we could not get any time for question answers. And also, the technical standards on information utility are important. And in case you would like to start the use of information utility, the most of the changes are based on online approval and online verification of the person who is using it and the data which is being submitted. And those kind of changes are technical changes. Please go through this, and in the next episode, which will be 150th episode, we would be inviting some eminent insolvency stakeholders to celebrate 150th, and also we would be discussing on cross-border insolvency. Thank you very much.